There you have it, 80 points in the green for the Nifty. The Sensex is up almost 300 points, looking pretty solid.
Right now, there has been a sudden pickup in the markets, up 0.5% on the benchmark indices.
Caps are underperforming with cuts of around 0.4%.
Been a sort of a mixed day, right? You know, the frontline indices have moved in this band of 19,800, went down to 19,700.
Are going to end with a 40-point gain.
Hello and welcome to Markets Today. I'm Ekta Batra. Here are the top stories this evening from Dalal Street. Sensex and Nifty ends with marginal gains after a late sell-off led by bank stocks. Mid-caps also see more profit booking. L&T Tech reports an in-line result for the first quarter. Net profit comes in at around over 311 crores. Margins beat street estimates, while Tata Elxsi sulks after a slow quarter and an uninspiring outlook. Management says it is cautious on transport and media verticals. IndusInd Bank's first quarter profits rise 33%. Net income rises 18%, beating estimates. Asset quality remains stable. Infosys gains after inking an AI and automation deal of nearly $2 billion. Sheila Foam laps up Kurlon, and for Lenko, a prominent investor exits Amara Raja Batteries. Tata Chemicals ups its stake in Rallis India, and Farmeasy closes in on a much-needed fundraise. Reliance Industries gains with less than 48 hours to go for the demerger of Jio Financial Services. Stock exchanges will hold a special price discovery session on Thursday. All right, well, straight to the market action for the day. Sensex and the Nifty ended the day marginally in the red after a late slide. Sensex gained more than 150 points and the Nifty gained nearly 40 points after failing to hold on to early gains. Bank stocks came under pressure, with the Nifty Bank ending marginally in the red. Mid-caps continued to see profit booking, with the index losing nearly 50 points. Prashant Nair is here with a wrap.
It was a quieter day after many days of the market doing very well. The Nifty will come up on your screen, the Bank Nifty on your screen as well. The banks, of course, has been the more troublesome part of the market for the bulk of last week before things repaired last Friday and yesterday. But some pressure was back there. Mid-caps and small caps pulled back. Small caps, which have been doing so well, pulled back more than mid-caps. Remember, the index was up 1% while mid-caps were flat yesterday, so some reversal coming through. I'll not spend very much time on the Nifty because not very much happened there, because the broader market and the action there will cover bulk of what happened. Amara Raja was the big loser today. There was news flow. There was that big block. Angel One lost 8% in trade. There were names like Happiest Minds, Kalyan Jewelers, which has done so well over the last 2 or 3 months, pulling back. CCL Products, Keynes, Aptus for the second straight session. Premier Explosives, which basically is up some 100% YTD pullback. Landmark, Indo-Count, and a few others. There were gainers. Polycap stands right in the top of that list. Huge blockbuster earnings and stock reacting in light of that. Delta recovered, the casino company, after the bashing it got after those tax changes. Sheila Foam, large acquisitions, market liked it. Dream Folks was up 10%. Datamatics, Schneider, Vaibhav Global, the imitation jewelry exporter, that did well. Saregama, Godrej Agrovet, Supreme Industries, which has been doing very well, and so on and so forth. Very stock-specific market, although by the end of it, more declines as compared to advances. As I said, a more quieter day after what has been, just a up and up go-go market for so many sessions now. Back to you.
Okay, all right, Prashant. Absolutely. More stock-specific for today's trading session. But in market opinion, Samir Arora of Helios Capital says that the Indian market looks disciplined as compared to the US market. Listen in.
India, I think, is still disciplined in the sense that in nearly, half year is over and the market, that is Nifty, is up like 10%. So that is not so out of line with any, normal strong year. The interest rates will still be hiked. At least one will be hiked now, and the language will not be changed, because whatever we say, their target is 2%. Now they have to otherwise change the target.
All right, well, on to the second headline now. Tata Elxsi fell over 2%. The company reported a 2% growth in net profit and a 17% increase in revenue. The management is cautious on the near-term growth in the media communication segment. Rima joins in with more details on this. Rima.
So Tata Elxsi has also reported a soft quarter. Revenue growth rates have slowed down for the company quite materially. In the current quarter, we're looking at a 1.5% top-line growth. quarter on quarter and about 17.5% on a year-on-year basis. But this is a company which was growing at a very, very fast rate. Margins too continue to come under pressure. Quarter on quarter, EBIT margins are down 20 basis points, but compared to the last year, margins are down more than 300 basis points. In fact, EBIT margins for Tata Elxsi used to be well over 30%. Now, the company operates in three key verticals: communication, media and transport, media and communication, and the other one is healthcare. In two of the verticals, that's transportation and media and communication, which totally account for 85% of the revenue, the company has sounded cautious. It's only in the healthcare vertical, 15% of the top line, that the growth rate has been quite strong. Morgan Stanley says the year-to-date rally on the stock makes them quite cautious. That's why they believe the risk-reward is unfavorable. JP Morgan further lowers the target price to 4,500. They're now saying this company will find it difficult to grow double-digit this year. They're penciling in a 9.5% constant currency growth in FY24. According to them, margins have peaked out, and this is a stock which is valued at 53 times forward multiple. So for a stock trading at 53 times forward PE, they believe the valuation burden is excessive given the slowing growth.
Okay, all right, Reema, thanks very much for that. So that was on Tata Elxsi, which was in focus. But staying with IT earnings, L&T Tech has posted a steady first quarter, meeting street estimates. Net profit rose 13% year-on-year, while revenues rose 15% as compared to last year. However, the company's net profit and revenue declined compared to last quarter. So that's what took place in terms of L&T Tech and the numbers. But let's move on to the third headline today. IndusInd Bank's first quarter profit rose by over 32% year-on-year, coming in line with estimates. Ritu Singh is here with the details.
Well, that's right. The core income of the bank, that is the net interest income, that grew by almost 18% over the previous year at 4,867 crore rupees for the quarter. This is on the back of a good growth in the advances of the bank that it reported, and of course, lower provisions aided in profit growth as well for the quarter, which was up by almost 30% compared to the previous year, with net profit coming in at 2,124 crore rupees. Margins improved. If you look at them, QOQ, they were flattish, from 4.28% to 4.29%. On a year-on-year basis, there was some improvement. Deposits growth was 15% for IndusInd Bank. Advances growth stood at 22% compared to the previous year. In terms of NPAs as well, it was a stable quarter for the bank. The gross NPA ratio, improved marginally to 1.94%, and the net NPA ratio from 0.59 to 0.58%. In terms of slippages, the total slippages for the quarter were 1,376 crores, write-offs of 720 crores, upgrades of 99 crores, and recoveries of 442 crores for the quarter, which includes a sale to ARC as well.
Okay, all right, Ritu. Thanks very much for that. Well, that is on IndusInd Bank. We'll be reacting to its numbers tomorrow. Time for a quick break now, but we'll be back with all of the other top stories. Welcome back. Well, on to the fourth headline today. It was a plethora of deals on Dalal Street today, starting with Infosys. The stock was the top Nifty gainer, rallied around 4% The tech major has entered into a framework agreement with a strategic client to provide AI services. Reema's here with the details on this.
The company has entered into a framework agreement with one of its existing strategic clients for a large $2 billion deal, which will be spread over the next 5 years. By a framework agreement, we mean one where the value of the contract has been estimated by the company. It's not been officially signed, but the indicative size is about $2 billion. Now, since this is with an existing strategic client of the company, the market presumes that there would be some existing revenues come in. So the entire $2 billion will not be net new, and we do not have clarity on what will be the incremental revenues from this transaction, but $2 billion is still a mega deal. Remember, the company is in a silent period ahead of its numbers on Thursday, but considering it's a mega deal, $2 billion, and the company needs such mega deals for it to at least come closer to the middle or upper end of its revenue guidance for the full year. So that's what gotten the stock very excited today.
Okay, all right, Reema, thanks very much for that. Well, Sheela Foam was in focus. It rallied 3 to 4%. It is all set to acquire 94.66% stake in Kurlon Enterprises at a valuation of around 2,150 crores. Manglam Malu joins in with the details.
Well, it is the deal of the year in this space in particular, where Sheela Foam has gone ahead and bought Kurlon, about 95% stake for a little over 2,100 odd crore rupees. And additionally, they've also invested 300 crore rupees for a 35% stake in Furlenco, which marks its entry into the fast-growing branded furniture market as well. Let's talk about Kurlon first. Over the last few years, the revenues of the company have been around 800 to 1,000 odd crores. And Sheela Foam, by virtue of paying 2,000 plus crores, has acquired this company for around 2 times price to sales, which is half of what it itself trades at. So that's value accretion immediately. Additionally, what it will do is it will aid their India revenue by almost 50% overall revenue by 35%, and add geographical synergies as well, because Sheela Foam is strong in the western and the northern parts of the market, whereas the southern and the eastern parts of the market have been dominated by Kurlon itself. We spoke to the management about the funding of the deal and other things, and here the key takeaways are that they have around 850 crores of cash on their books. The total deal value, including this and Furlenco, would be close to around 2350 odd crores. So the balance 1500 crores would be funded by a mix of debt and equity. Kurlon margins currently are 4.5% to 5%, but they will normalize immediately to 13 to 14%, and they will bring Kurlon to a revenue run rate of 1,000 crores per year immediately as well. Also, the combined market share of the giants in the organized market would be close to around 40%, and if you take the total market, it would be close to around 20-21% itself. And in terms of immediate synergy benefits, they could see close to around 300 basis points accretion in the margins within the first couple of months of this acquisition, the whole benefit of which will play out in FY25 itself. On Furlenco, remember their FY23 revenues were close to around 150 crores, but it's a fast-growing market, and on that the management has said that they will see EBITDA positivity. It's already EBITDA positive. They will see PAT positivity or net profit positivity by October itself. And for a year at least, they won't increase their stake, but maybe a year later, they will look at increasing their stake there as well.
Okay, all right, Manglam, thanks very much for that. Well, let's move on to another piece of news. Amara Raja tumbled 6% after around 24.6 million shares, representing around 14% stake of the company, changed hands on the exchanges. Vivek Iyer is here with the details on this story.
Well, that's right. Today morning, like we alluded to, earlier, prior to market open, that Amara Raja, we were likely to see a very large block deal along expected lines. 14% of the total equity, in the company actually exchanged hands. We saw the term sheet, prior to this particular deal, and we understand that the likely seller was ARBL Holding, that at the end of the June quarter held a 14% stake. So, what we understand is that they've completely exited the 14% stake, and it's a clean-out trade. Remember, they used to own almost 24%, and in 2021, they had exited an other 10% stake in the company. What is, Clarios ARBL Holding? It's a global battery technology company, and they also used to have a battery tech transfer agreement with Amara Raja. It's a complete exit. It was a bit of a overhang as far as the stock price is concerned. It's important to see, who the buyers are, once the list release post-market hours today, but a very large block deal, and as per our sources, we understand that Clarios ARBL Holding has completely exited the 14% stake they held in the company.
All right, well, let's move on. Thanks, Vivek, for that. Rallis India gained close to 1%. Tata Chemicals is set to acquire an additional 5% stake worth around 208 crores in the company through a block deal. Sonal Bhutra is here with the details on this.
Thank you so much for that. Well, yes, Rallis India is in focus. Tata Chemicals has acquired additional 5% stake in the company at a price of 215 rupees per share. This is via block deal. And post-acquisitions, company's shareholding, that is Tata Chemicals shareholding in Rallis, will increase to 55.04%. Currently, Tata Chemicals owns around 50.09% stake in Rallis India. Now, who could possibly sell that bigger stake? So I just looked at some of the shareholding, and the important ones include Rakesh Jhunjhunwala and family holding around 7.75% stake in the company, and SBI long-term equity fund holding around 5% stake as well. So there is a possibility either of the two would have sold that 5% stake here. However, Rallis also reported numbers over the weekend and had a conference call yesterday. So there were some brokerage notes that we got overnight. Nuvama says that Rallis's Q1 numbers were much better than expected. Industry environment continues to be quite challenging, and domestic numbers, they were impacted because of delayed monsoons. Export volumes were also impacted because of inventory challenges. So they maintain a reduce here with a target price of 161 rupees a share. Kotak says that management offered a cautious outlook for FY 2024 exports, and falling input costs will not boost margins for the company as customers are demanding reduced prices of finished products as well. So they also remain cautious amid limited earnings visibility. So two sets of news that we need to watch out for as far as Rallis is concerned.
All right, Sonal, thanks very much for that. Well, on to an exclusive. Farmeezy's parent company has agreed to raise more than 2,000 crores after a hefty cut of its valuation. We learned from sources that Manipal Group will bridge any potential shortfall if all investors do not participate in the rights issue.
In a final effort for the survival and saving of API Holdings, the parent company of Farmeezy, late night on Monday, we gathered that all the investors of Farmeezy, along with the founders, had met to build a consensus and a solution. So the final outcome of that is that the 2,000 to 3,000 odd crore rupees will be the rights issue amount for Farmeezy, and all the investors can, on a pro rata basis, subscribe to this rights issue for fund infusion to the company at a very low valuation of at par or face value share price. And then the shortfall in the rights issue is something that can be mitigated with Manipal Group family office's offer that is already approved by the board of API Holdings. But remember, section of the existing shareholders and investors of Farmeezy had raised concerns about getting hugely diluted because of the low valuation at which Manipal Group is likely to infuse funds, and therefore the company has come up with a solution to first give the right to the existing shareholders, and if there is any quota which is unsubscribed, that shortfall can be filled up by Manipal Group, because the company clearly needs cash at this point, and at least 2,500 odd crore rupees to repay debt to Goldman Sachs, to which it has pledged, remember, as collateral shares in group companies, especially of listed company Thyrocare. So that fund infusion plan is there. Of course, the exact amount of rights issue will be decided in the next few days, we gather. And also remember that this fundraising will be at a huge valuation drop from the current valuation of the company of $2.8 billion. So depending on 2,000 or 3,000 crores being raised, it could be post-money valuation could be 6,000 to 7,000 crore rupees.
Okay, all right, Nisha, thanks very much for that. Well, staying with this story, Ravi Lamba, head of investment group at Temasek, told Nisha Podar that they will invest more in Farmeezy and is also bullish on the healthcare space.
The strategic involvement and M&A and strategic investors partnering with financial investors is a theme that we've seen often repeated in the world. And I think it's an important, it's a good thing, actually, the marriage of that, because it brings different disciplines together.
That's right. And but otherwise, on online pharmacy, your view remains bullish, Ravi?
I think we are bullish on the broader healthcare sector, and pharmacy is part of that sector.
Okay, well, on to the fifth headline today. Then Reliance Industries gained as there is less than 48 hours to go for the demerger of Jio Financial Services. Stock exchanges will hold a special price discovery session on Thursday. Prashant is here with the details on this.
Big event over the next 48 hours is going to be the demerger of Jio Financial Services from Reliance Industries. Remember that at the time of declaring the second quarter 23 earnings, Reliance had announced the demerger of Jio Financial Services for a ratio of 1 equity share of Jio Financial for 1 fully paid up share held in Reliance Industries. Now, this is now basically taking place. The process of demerger is taking place starting Thursday morning. First things first, the record date or the ex-date to determine who is eligible to get Jio Financial shares is 20th of July. So if you own shares as of that day, you're eligible to get shares in Jio Financial Services. Now, naturally, Jio Financial is being spun out of Reliance Industries. The share price of Reliance will have to adjust accordingly, right? Lower. That would essentially depend. How much lower would essentially depend on the value, what the street gives as value to Jio Financial Services. I will get into that a little later. But let's just tackle the immediate next couple of steps. On Thursday morning, exchanges will hold a special price discovery session for Reliance Industries. To use an example, suppose at the end of that, 30-45 minutes price discovery session on Thursday morning, Reliance Industries, say, closes at 900 rupees. This is just an example. And the prior close on Wednesday, that is tomorrow's close, is 1,000 rupees. Then that means the spun-off business, that is Jio Financial Services, will be quoted at 100 rupees. That is the difference between the price of the company undergoing the demerger, Reliance, on the day prior to the record date, and its discovered price in the pre-open session on the record date, which is Thursday. So 1,000 minus 900, 100 rupees will be the value for Jio Financial Services, using this as an example. Now, Jio Financial will also be included in indices specified by NSE. They published that list, including the Nifty 50, at this 100 rupee constant value. And it will continue to stay in the indices at this constant price of 100 till Jio Financial is listed. Remember, the date of listing is not known yet. But once Jio Financial is listed, at a future, yet unknown date, the stock will then be removed from the index after the end of the day on third day of its listing, subject to certain price fluctuation conditions. If Jio Financial, say, lists on day T, the stock will be delisted from the indices at the end of T plus 3 days. Now, just a word on the F&O impact for Reliance as well. In the run-up to the record date, which is day after, based on existing rules, all F&O contracts are going to expire tomorrow, as of the end of tomorrow. Now, to wrap this up, just a quick word. How is the street thinking about valuing Jio Financial right now? Well, markets are currently ascribing value only to the treasury stake of Reliance that Jio Financial would own. That's about 6% or so. And analysts are putting that number at between 160 to 200 rupees per share based on this holding. Of course, the value of Jio Financial would be higher, much higher, one presumes, as details on business strategy, targets, milestones, etc. are made public. And to that end, markets are expecting that the upcoming AGM will focus extensively on Jio Financial Services and the plans that Reliance has in that regard. Back to you.
Okay, all right. Thanks, Prashant, for that. And that is a disclaimer on your screen that Reliance is the owner of the channel that you're watching. On that note, it's a wrap on this edition of Markets Today. Thanks very much for watching.